Welcome, students, to this Premium Revision Explainer. I am absolutely thrilled to have you here. You know, as a mentor with over 25 years of experience teaching CA inner auditing and ethics, my goal today isn't just to read standard numbers off a page for you. Oh, no way. We're going to guide you through the exact sequence of a real audit, working right from first principles. We're going to make sure you nail these concepts, actually remember them long-term, and most importantly, score maximum marks in your ICAI examinations. All right, let's dive right into this masterclass. Okay, so here's our mental roadmap for today's explainer. We're going to start with the big picture, then move through assessing risks with SA 315, setting materiality with SA 320, designing our responses with SA 330, and then we'll cap the whole thing off with a rapid revision summary. Let's get to it.
Section 1, the big picture. I want you to really visualize this for a second. Picture yourself walking through the glass doors of a fast-growing, bustling retail startup. It's day one of a brand new audit assignment. So how do you audit a business you don't even understand? Well, the short answer is you simply can't. Before we even think about checking a single invoice or looking at a bank balance, we absolutely must deeply understand the environment we're operating in. I mean, if you don't know how the startup actually makes its money, how on earth can you know if their revenue numbers are real?
And that right there brings us to the foundation of the entire audit lifecycle. Look, SA 315, 320, and 330, they aren't just isolated textbook chapters. They're a continuous, perfectly logical sequence. First up, SA 315 tells us how to understand the entity so we can identify risks. Then, SA 320 steps in to help us figure out exactly how big an error needs to be to actually matter. That's our materiality threshold. And finally, SA 330 dictates how we respond to those specific risks we found. Trust me on this, master this flow and you master the absolute core of auditing.
All right, moving on to Section 2, SA 315, Assessing Audit Risks.
So the ultimate ICAI objective here is to identify risks at both the financial statement and assertion levels. But how do we actually do this? We use Risk Assessment Procedures, or RAP. Students, I want you to remember this acronym, IAO. First, inquiries. We ask the retail startup's management about things like aggressive new store expansions. Second, analytical procedures. We analyze their sales trends and margins to see if they actually make sense for a startup of this size. And third, observation and inspection. We physically walk through their new warehouses and we inspect their actual business plans. This is exactly how we gather that vital initial evidence.
Now, let's look at the exact ICAI definition of internal control. Students, listen closely. I need you to memorize the acronym DIM, D-I-M, Designed, Implemented, and Maintained. Examiners are actively hunting for these three specific words on your paper. Internal control, it isn't just some dusty manual sitting on a shelf. It's the active process, DIM, designed, implemented, and maintained by those charged with governance to make sure business objectives are achieved reliably. To properly identify risks, we've got to understand the entity across a few specific pillars. We're talking about the regulatory environment, the exact nature of their operations, and their big-picture business strategies, like, say, expanding into new cities, and the related business risks if demand turns out lower than expected. But wait, here is a massive trap where so many students lose marks. SA 315 explicitly states that this understanding is a continuous, dynamic process. What students usually forget is that it's not just some one-time checklist you fill out on day one and then totally forget about. It's ongoing. Section 3, SA 320, Mastering Audit Materiality.
Okay, so once we know the risks, we have to determine what size of an error would actually influence users' decisions. But here is a definition that frequently trips up students. Performance materiality. Please do not confuse overall materiality with performance materiality. Let's translate this textbook wording from first principles, okay? Think of performance materiality simply as your safety buffer. Let's say overall materiality is 100,000 rupees. Well, we might set performance materiality lower at, say, 70,000 rupees. Why? To ensure that a bunch of tiny, undetected 5,000 rupee errors don't accidentally aggregate together and blow right past our overall limit. Make sense?
So how do we set that initial materiality in the first place? We use a benchmark. And guys, this is a classic 4-mark ICAI question, identifying factors for an appropriate benchmark. For our rapidly growing retail startup, which, let's say, isn't profitable yet because of heavy investments, the users aren't focusing on profit, they're focusing on top-line growth. Therefore, we choose total revenue as our benchmark. We are directly considering the entity's life cycle and what the users actually care about.
Please cement this crucial formula into your mind. Audit risk is a function of the risks of material misstatement, which, remember, we assessed back in SA 315, and detection risk. I really want to stress here that materiality and audit risk have an inverse relationship. They are considered together continuously, from the very beginning of planning all the way down to evaluating uncorrected misstatements at the very end of the audit.
Let's turn to Section 4, SA 330, the auditor's responses.
We've assessed the risks, we've set our materiality thresholds, now what do we actually do? Well, we design our responses. Let's tackle the absolute most common student confusion right now, tests of controls versus substantive procedures. Think of it like a cash register. A test of controls checks the process. It's like checking if the cashier actually uses the physical lock on the register. A substantive procedure, on the other hand, checks the numbers. It's like opening that register and physically counting the cash to detect misstatements directly at the assertion level. Process versus numbers.
Now, SA 33 mandates two very specific scenarios for when an auditor must perform tests of controls. First, when you actually plan to rely on those controls to reduce your substantive testing. Or second, in highly automated businesses where substantive procedures alone simply cannot provide sufficient appropriate audit evidence. Watch out for this one, guys. It's a frequent, and I mean frequent, ICAI exam trap.
All right, I'm putting on my strict mentor tone for this next rule, so listen up. Inquiry alone is absolutely not sufficient. You cannot just walk up to the retail startup's warehouse manager, casually ask, "Hey, do your inventory controls work?" and just take their word for it. No way. You must combine inquiry with observation, inspection, or reperformance to gain reliable evidence. Remember, an observation is only pertinent at the exact point in time it's made, so combining these procedures is the absolute key.
Finally, Section 5, Rapid Revision Summary. Let's lock these concepts into your long-term memory right now. I want you to take a mental snapshot of how these frameworks interact. SA 315 is all about understanding the entity to assess risks. SA 320 is setting your boundaries based on users' economic decisions and establishing performance materiality. And SA 330 is your tactical response using substantive procedures and test of controls. If you use these exact ICAI exam words on your paper, you signal directly to the examiner that you truly master this core life cycle.
As we wrap up this masterclass, I want to leave you with this challenge. Are you ready to take this practical first principles understanding directly into your exam hall? When you read a case study about a complex new client, don't panic. Take a breath and just ask yourself, what are the risks here, what is material, and how must I respond? Master that logic, and I promise you, there isn't an audit question you can't conquer. Keep revising, stay super focused, and I will see you in the next explainer.